Hey everyone, welcome back to our CA Foundation Business Economics series where we are discussing business economic concepts and chapters in a most quick and practical manner. So, without wasting much time, let's get back to the video. Today, we will be discussing Unit 2, the instrument of trade policy, in Chapter 9, International Trade. So, here is a quick overview for it. So, we have international trade, in which we have the instruments of trade policy, which consist of tariffs, non-tariff measures (NTMs), and export-related measures. So here is a quick introduction. Before we go into the subject matter of this unit, we shall take a quick look at a few recent developments in India's international trade strategy. So, get it? After a decade of achieving free trade deals, India has embarked on a FTA, that is free trade agreement signing spree that is quickly transforming the country into one of the most FTA engaged countries in the world. The reinvigorated free trade agreement rush began with an agreement with Mauritius on 1st April 2021, followed by fast track negotiations with the United Arab Emirates UAE, Australia, the United Kingdom UK, Canada, and the European Union EU. On 18th Feb 2022, a comprehensive economic partnership agreement CEPA with the UAE was concluded within 90 days of the commencement of negotiations and has been in force since 1st May 2022. In addition, an economic cooperation and trade agreement ECTA with Australia also concluded on 2nd April 2022. The next highly anticipated free trade agreement in the work is with the UK, which is expected to conclude by Diwali, the Festival of Lights, in October 2022. Free trade agreement discussions are also on the fast track with Canada, the EU, as well as within the Gulf Cooperation Council GCC, that is Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the UAE and Israel. As we know, under free trade agreements, buyers and sellers from separate economies voluntarily trade with the minimum of state interference. The free interplay of market forces of supply and demand decides the prices. Protectionism, on the other hand, is a state policy aimed to protect domestic producers against foreign competition through the use of tariffs, quotas, and non-tariff trade policy instruments. Trade liberalization refers to opening up of domestic markets to goods and services from the rest of the world by bringing down trade barriers. In Unit 1, we have seen that there are clear efficiency benefits from trade in terms of economic growth, job creation, and welfare. The persuasive academic arguments for open trade presuppose that fair competition without distortion is maintained between domestic and foreign producers. However, it is a fact that fair competition does not always exist, and unobstructed international trade also brings in severe dislocation to many domestic firms and industries on account of difficult adjustment problems. Therefore, individuals and organizations continue to pressurize policymakers and regulatory authorities to restrict imports or to artificially boost up the size of the exports. Historically, as part of these protectionist measures, governments of different countries have applied many different types of policy instruments, not necessarily based on their economic merit, for restricting the free flow of goods and service across national boundaries. While some such measures of government intervention are simple, widespread, and relatively transparent, others are complex, less apparent, and frequently involve many types of distortions. In this unit, we shall describe some of the most frequently used forms of interference with trade. Understanding the uses and implications of the common trade policy instruments we will enable formulation of appropriate policy responses and more balanced dialogues on trade policy issues and international trade agreements. Trade policy encompasses all instruments that government may use to protect or restrict import and export. Trade policy also includes the approach taken by countries in trade negotiations. While participating in the multilateral trading system and or while negotiating bilateral trade agreements, countries assume obligations that shape their national trade policies. The instruments of trade policy that countries typically use to restrict imports and or to encourage exports can be broadly classified into price-related measures such as tariffs and non-price measures or non-tariff measures (NTMs). In the following section, we shall briefly touch upon the different trade policy measures adopted by countries to protect their domestic industries. Then comes tariffs. Tariffs, also known as custom duties, are basically taxes or duties imposed on goods and services which are imported or exported. Imported means goods. This is India. This is US. We import goods. That is we US sells goods to India. That is Apple iPhones. This is called import. Similarly, India sells say onion to US or other countries, onion or vegetables and fruits. So this is called export. Export. Just I will write it properly. Export. This is import. Means import means bringing in India. Bringing. I think I am unable to write it. I will just mark it. Imports mean arrow in India, export means out of India. So different tariffs are generally applied to different commodities. It is defined as a financial charge in the form of taxes imposed at the border on going goods from one custom territory into another. They are the most visible and universally used trade measures that determine market access for goods. Instead of a single tariff rate, countries have a tariff schedule which specifies the tariff collected on each particular goods and service. Means हर एक प्रोडक्ट गुड्स और सर्विस के लिए स्पेसिफिक रेट्स दिए इम्पोर्ट ड्यूटीज़ के. Import duties being pervasive than export duties, tariffs are often identified with import duties, and in this unit, the term tariff would refer to import duties. मतलब specifically import duties की बात कर रहे हैं. Tariff are aimed at altering the relative price of goods and services imported so as to contract the domestic demand and thus regulate the volume of their imports. Tariff leave the world market price of the goods unaffected while raising the price in the domestic market. The main goal of tariff are to raise revenue for the government के लिए पैसा जमा करना, and more importantly to protect the domestic import competing industries. मतलब domestic industries को harm नहीं होना चाहिए. Then we have forms of import tariff. First is specific tariff. Specific tariff is the fixed amount of money per physical unit or according to the weight or measurement of the commodity imported or exported. This tariff can vary according to the type of good imported. Example, a specific tariff of say rupees 1000 may be charged on each imported bicycle. The disadvantage of specific tariff as an instrument for protection of domestic producer is that its protective value varies inversely with the price of the import. For example, if the price of the imported cycle is 5,000 and the rate of tariff is 20%, that is 1000, then if due to inflation the price of the bicycle rises from to 10,000, the specific tariff is still 10% of the value of the import. Means ये fixed amount रहेगा 1000 irrespective of the आपका ये. Since the calculation of these duties does not involve the value of merchandise, custom valuation is not applicable in this case. Second है ad valorem tariff. काफ़ी इंटरेस्टिंग है ये. When the duty is levied as a fixed percentage of the value of the traded commodity, it is called as Voltram tariff. Ad valorem tariff is levied as a constant of the monetary value of 1 unit of the imported goods. A 20% ad valorem on any bicycle generates say rupees 1000 payment on each imported bicycle priced at 5000 in the world market, and if price rises to 10,000 it will generate a payment of 2000 सीधा परसेंट पे वैल्यू के. While ad valorem tariff preserves the productive value of tariff on home producers, it gives incentives to deliberately undervalue the goods price on invoices and bills of lending to reduce tax burden. मतलब जानबूझ के इसका प्राइस कम रखते हैं ताकि टैक्स कम लगे. Nevertheless, ad valorem tariffs are widely used across the world. ये ज़्यादा फेमस है. Then there are many other variations of above tariff such as mixed tariff. Mixed tariffs are expressed either based on the value of the imported goods as I add वोल्रम जैसा ऊपर वाला सीधा परसेंट पे, or on the basis of a unit of measure of the imported goods, a specific duty, depending on which generates the most income or at least income at times for the nation. For example, duty on cotton 5% ad valorem or rupees 3000 per ton, whichever is higher. समझा है? Either 5% or I will try to write here 5% or rupees 3k per ton, whichever is higher. Then comes compounded tariff or a compound duty. It is a combination of an ad valorem and a specific tariff. That is, the tariff is calculated on the basis of both the value of the imported duty, that is ad valorem, and a unit of measure on the imported goods, that is specific duty. It is generally calculated up adding up a specific duty to an ad valorem duty. Thus, on an import with quality Q, say, and price is P, a compounded tariff collected as revenue equals to T into Q plus T into P into Q, where T is to S stands for specific tariff, S equal to specific, or A equal to ad valorem. For example, duty on cheese is 5% ad valorem plus 100 रुपीज़ पर kg. दोनों भी है इस पर. इधर और था ये और ये, इधर एंड है, दोनों कंबाइन है. फिर आता है technical or other tariff. These are calculated on the basis of specific contents of the imported goods. The duties are payable by its components or related items. For example, rupees 3000 on each solar panel plus rupees 500 per kg on the battery. मीन्स कंपोनेंट के बेसिस पे. फिर आता है टैरिफ रेट कोटास. टैरिफ रेट कोटास TRQs combine two policy instruments, that is quotas and tariffs. So imports entering into specific quota portion are usually subject to a lower, sometimes zero tariff rate. Imports above the quantitative threshold of the quota faces a much higher tariff. मीन्स एक लिमिट तक किएंगे में भी आपको लोअर टैरिफ लगेगा या फिर ज़ीरो लग सकता है, और वो लिमिट के ऊपर आपने एक्सपोर्ट या इम्पोर्ट किया तो आपको हायर टैरिफ लगेगा. फिर आता है मोस्ट फेवर्ड नेशन टैरिफ. MFN tariff refers to the import tariff which countries promise to impose on imports from other members of the WTO unless the country is a part of preferential trade agreement such as free trade area or custom union. This means that in practice MFN rates are the highest, most restrictive that WTO members charge with each other. Some countries impose higher tariff on countries that are not part of WTO. मीन्स नॉन मेंबर्स को हायर भी चार्ज करता है कोई. फिर है वेरिएबल टैरिफ. सो ड्यूटी टिपिकली फिक्स टू ब्रिंग द प्राइस ऑफ इम्पोर्टेड कमोडिटी अप टू लेवल ऑफ द डोमेस्टिक सपोर्ट प्राइस ऑफ द कमोडिटी. फिर आता है प्रेफरेंशियल टैरिफ. सो nearly all countries are part of the least one preferential trade agreement under which they promise to give another country's product lower tariff than their MFN rate. मतलब ये वाला रेट से कम lower tariff. These agreements are reciprocals, means आप हमारे एक गुड्स को लोअर टैरिफ दो, हम आपके कोई एक गुड्स को गुड्स को लोअर टैरिफ देंगे, कम टैक्स लगाएंगे. और लोअर टैरिफ इज चार्ज फ्रॉम गुड्स इंपोर्टेड फ्रॉम अ कंट्री which is given preferential treatment, special preferential treatment. Examples are preferential duties in the EU region, under which a goods coming from one EU country to another is charged zero tariff. Another example is North American Free Trade Agreement (NAFTA) among Canada, Mexico, and the US, where the preferential trade rate is zero on essentially all products. Country specific, especially the affluent one, also grant unilateral preferential treatment to selected list of products from specific developing countries. The generalized system of preferences (GSP) is one of such system which is currently prevailing. I think आपको नहीं दिख रहा होगा थोड़ा सा. Then we have bound tariff. Under this, a WTO member binds itself with the legal commitment not to raise tariff rate above a certain level. By binding a tariff rate, often during negotiations, the member agree to limit their rights to set tariff level beyond a certain level. The bound rates are specific to individual products and represent the maximum level of import duty that can be levied on a product imported by a member. एक कोई लिमिट सेट करते हैं. A member is always free to impose a tariff that is lower than the bound rate. Once bound, a tariff rate becomes permanent and a member can only increase its level after negotiating with its trading partner and compensating them for possible losses of trade. A bound tariff ensures transparency and predictability. फिर आता है applied tariffs. Applied tariff is the duty that is actually charged on imports of a most favored nations basis. A WTO member can have applied tariff for a product that differs from the bound tariff for that product as long as applied level is not higher than the bound level. applied level bound से नीचे चाहिए. applied level bound level, sorry उल्टा. बाउंड बोलते मैक्सिमम, बाउंड लेवल अप्लाइड. फिर आता है escalated tariff structure refers to the system wherein the normal tariff rates on import of manufacturing goods are higher than the nominal tariff rates on intermediate inputs and raw material. That is, the tariff on a product increases as the product moves through the value added chain. For example, a 4% tariff on iron ore or iron ingots and the 12% tariff on the steel pipes. This type of tariff This type of tariff is discriminatory as it protects manufacturing industries in importing countries and dampens the attempt of developing manufacturing industries of exporting countries. This has a special relevance to trade between developed countries and developing countries. Developing countries are thus forced to continue to be supplier of raw material without much value addition. फिर आता है prohibitive tariff. A prohibitive tariff is one that is set so high that no import can enter. Could be say 100%, 200%. Example, import subsidies. So import subsidies also exist in some countries. Import subsidy means incentive देते हैं government. Is simply a payment per unit or as a percent of value for the importation of goods. Example, negative import tariff. सब्सिडीज मतलब आपने से एक्स वाई जेड इम्पोर्ट किया है तो आपको टैक्स लगने के वजह से टैक्स कम होगा, उस पर आपका प्राइसिंग कम होगा, कुछ गवर्नमेंट इंसेंटिव देगा. से आपने 100 रुपीज़ का प्रोडक्ट लिया तो गवर्नमेंट बोलता है अगर आपने एक्स वाई जेड प्रोडक्ट 100 रुपीज़ में आपने परचेस किया तो आपको 10 रुपीज़ हमारे पास से मिलेगा. इसका मतलब आपका परचेसिंग कॉस्ट 90 रुपीज़ होगा. इंसेंटिव इंसेंटिव फिर आता है tariff as response to trade distortions. Sometimes countries engaged in unfair foreign trade practices which are trade distorting in nature and adverse to the interest of the domestic firm. So the affected importing countries, upon confirmation of the distortion, respond quickly by measures in the form of tariff response to offset the distortion. These policies are often referred to as ट्रिगर्ड प्राइस मैकेनिज्म, मतलब कुछ स्पेसिफिक प्राइस की बेसिस पे The following section relate to such tariff responses to distortions related to foreign dumping and export subsidies. मतलब फॉरेन डंपिंग मतलब फॉरेन कंट्रीज़ को उनके लोकल गवर्नमेंट इंसेंटिव देती है कि आप ज़्यादा से ज़्यादा एक्सपोर्ट करो, तो फॉरेनर फिर लोअर प्राइस में एक अलग कंट्री से इंडिया में डंप करते हैं, एग्जांपल चाइनीज़ गुड्स। फिर आता है एंटी डंपिंग ड्यूटीज़। सो एन एंटी डंपिंग ड्यूटी इज द protectionist tariff that a domestic government imposes on foreign imports that is believed are priced below fair market value. Dumping occurs when manufacturer sells goods in a foreign country below the sale price in their domestic market or below their full average cost of the product. Dumping may be persistent, seasonal, or cyclical. Dumping also be resorted as a predatory pricing practice to drive out एस्टेब्लिश डोमेस्टिक प्रोडक्ट, मतलब लोअर प्राइस में देना है, लोअर प्राइस, ताकि जो एग्जिस्टिंग लोकल प्लेयर्स है कंप्यूटर्स है वो कंपटीशन के बाहर हो जाए। मान लो से गुड्स का एक्चुअल कॉस्ट है 100 रुपीज़, प्राइसिंग है 120, तो कोई फॉरेन कंट्री आके उसको 90 में बेच रहा है, तो लोकल कंट्रीज़ को वो फिजिबल नहीं है, तो वो प्रोडक्शन करना बंद करेंगे और कंपटीशन के बाहर हो जाएंगे from the market and to establish a monopoly position. Dumping is an dumping ध्यान में रखना is an international practice, price discrimination favoring buyers of export, but in fact the exporters deliberately forgive money in order to harm the domestic producers of the importing countries. जानबूझ के खुद भी इसका प्रॉफिट भी वो जहाँ पे 10 रुपीज़ कमा रहा होगा वो प्रॉफिट 0 पे ही सेल करेगा ताकि ये डोमेस्टिक कंपटीटर्स वाले बाहर हो जाए, और वंस वो मोनोपोली क्रिएट कर लिया उसने तो वो प्राइस बढ़ाएगा और जो भी उसका लॉस है अर्लियर वो पूरा सेट ऑफ करा लेगा। डंपिंग इज अनफेयर एंड constitutes a threat to the domestic producers, and therefore when dumping is found, anti-dumping measures may be initiated as a safeguard measures by imposing additional import duty or tariff so as to offset the foreign firms' unfair price advantage. This is justified only if the domestic industry is seriously injured by import competition and protection is in national interest, देश हित में. That is, the associate cost to consumers would be less than the benefit that would accrue to producers. For example, in Jan 2017, India imposed anti-dumping duties on colored coated or pre-printed flat steel products imported into the country from China and from European nations for a period of not exceeding 6 months, and for jute and jute products from Bangladesh and Nepal. फिर आता है काउंटरवेलिंग ड्यूटीज, इसको बोलते हैं CVT. Countervailing duties are tariffs that aims to offset the artificially low prices charged by exporter who enjoys export subsidies and tax concession offered by the government in their home country. If the foreign country does not have a comparative advantage in a particular good and the government subsidy allows the foreign firm, मतलब जो exporter है, to be an exporter of the product, then the subsidy generates a distortion from the free trade allocation of resources. In such cases, CVD is charged in an importing country to negate the advantage that exporters get from subsidies to ensure freight and market oriented pricing of imported products and thereby protecting domestic interests and firms. For example, in 2016, in order to protect domestic industry, India imposed 12.5% CVD, that is countervailing duties, on gold jewelry imported from एशियन का फुल फॉर्म कमेंट करना। सिंपल बताओ इसका शॉर्ट में लॉजिक क्या है कि इसे अभी मैं बताया 100 रुपीज़ एक प्रोडक्ट का प्राइस है जो इंडिया में मिल रहा है, और इसे वाई कंट्री में वो उसका प्राइस 100 है, पर उनका गवर्नमेंट उसको बोल रहा है कि 20 रुपीज़ हम इंसेंटिव देंगे, आप एक्सपोर्ट करो, तो उसका नेट प्राइस हो रहा है 80, तो वो 80 में एक्सपोर्ट कर रहा है इंडिया में, तो इंडिया वाले देखेंगे कि अरे हमारे यहाँ पे प्राइस तो 100 है पर ये 80 में बेच रहा है, तो इसको सेम प्राइस पे लाने के लिए क्या करना चाहिए, तो उसके लिए 20 रुपीज़ का उसको CVD लगाएंगे, तो उसका प्राइस हो जाएगा 100, तो वो सेम लेवल पे आएगा। ये क्यों लगा रहे, ताकि लोकल प्राइस और ग्लोबल प्राइस सेम इस पे एक्सपोर्ट प्राइस, और डोमेस्टिक वालों को नुकसान ना हो। Then comes effects on tariffs. A tariff levied on a imported product affects both the exporting country and the importing country. Tariff barriers creates obstacle to trade, decreases the volume of imports and exports and therefore of international trade. The prospect of market access of the exporting country is worsened when an importing country imposes a tariff. By making imported goods more expensive, tariff discourage domestic consumers from consuming imported foreign goods. Domestic consumers suffers a loss in consumer surplus because they must now pay a higher price for the goods, and also because compare of free trade quantity, they now consume they now consume less quantity of the goods. Tariff encourages consumption and production of the domestically produced import substitutes and thus protect domestic industry. टैरिफ का मेन इंटेंशन है कि डोमेस्टिक वालों को प्रोटेक्ट करना, वन ऑफ द मेन बोल सकते हैं. Producers in the importing countries experience an increase in well-being of as a result of imposition of tariff. The price increase of their product in the domestic market increases producers' surplus in the country. They can also charge higher price than it would be possible in the case of free trade because foreign competition has reduced. मतलब वंस फॉरेन कंपटीशन रिड्यूस हो गया तो उनका प्राइस वो बढ़ा सकता है. जहाँ पे वो अभी 100 में बेच रहे हैं, 100 में से 110 में भी बेच सकते हैं न्यू प्राइस. फिर आता है द प्राइस इंक्रीज ऑल्सो इंड्यूसेस an increase in the output of the existing firms and possibly addition of new firms due to entry into the industry to take advantage of the new high profits and consequently an increase in employment in the country industry. Tariff creates tariff creates trade distortions by disregarding comparative advantage and prevent countries from enjoying gains from trade arising from comparative advantage. Thus, tariffs discourage efficient production in the rest of the world and encourage inefficient production in the home country. Tariff increases government revenue of the importing country by the value of total tariff it charges. Trade liberalization in recent decades, either through government policy measures or through negotiated reducing through the WTO or regional and bilateral free trade agreements, has diminished the importance of tariff as a tool of protection. Currently, trade policy is focusing increasingly on not so easily observable forms of trade barriers, usually called non-tariff measures (NTMs). NTMs are thought to have more important restrictive and distortionary effects on international trade. They have become so invasive that the benefits due to tariff reductions are practically offset by them. Now comes the non-tariff measures (NTMs). From the discussion above, we have learned that tariffs constitute the visible barriers to trade and have the effect of increasing the price of imported merchandise. By contrast, the non-tariff measures, which have come into greater prominence than the conventional tariff barriers, constitute the hidden or invisible measures that interfere with free trade. Non-tariff measures are policy measures other than ordinary custom tariff that can potentially have an economic effect on international trade in goods, changing quantity trades or price or both. UNCTAD, United Nations, I think CAD, 2010 non-tariff measures comprise all types of measures which alter the conditions of international trade, including policies and regulations that restrict trade and those that facilitate. NTM consists of mandatory requirements, rules or regulations that are legally set by the government of the exporting, importing or transit countries. It should be kept in mind that NTMs are not the same as non-tariff barriers (NTBs). NTMs are sometimes used as means to circumvent free trade rules and favor domestic industries at the expense of foreign competition. In this case, they are called non-tariff barriers (NTMs). In other words, non-tariff barriers are discretionary non-tariff measures imposed by governments to favor domestic or foreign suppliers. NTBs are thus a subset. Subset mean NTMs. NTMs ये सर्कल और ये NTB इसको बोलते हैं subset. NTBs are thus a subset of NTMs that have protectionist or discriminatory intent. Compared to NTBs, non-tariff measures encompasses a broader set of measures. According to WTO agreements, the use of NTMs is allowed under certain circumstances. Example of this include technical barriers to trade (TBT) agreements and sanitary and psychosantry measures (SPS) agreements, both negotiated during the Uruguay round. However, NTMs are sometimes used as a means to circumvent free trade rules and favor domestic industries at the expense of foreign competition. In this case, they are called non-tariff barriers (NTMs). It is difficult and sometimes impossible to distinguish legitimate NTMs from protectionist NTMs, especially because the same measures may be used for various reasons. Depending on their scope and or design, NTMs are categorized as: first, technical measures. Technical measures refer to product specific properties such as characteristics of the product, technical specification, and production process. The measures are intended for ensuring product quality, food safety, environment protection, national security, and protection of animal and health. Non-technical measures. Non-technical measures relate to trade requirements, for example, shipping requirement, custom formalities, trade rules, taxation policies, etc. They are further distinguished as hard measures, that is price and quantity control measures, threat measures, that is anti-dumping and safeguards, and other measures such as trade-related finance and investment measures. Further, the categorization also distinguishes between import-related measures, which relates to measures imposed by the importing countries, and export-related measures, which relates to measures imposed by the exporting countries itself. In addition to these, there are procedural obstacles (PO), which are practical problems in administration, transportation, delays in testing, certifications, which may make it difficult for business to adhere to a given regulation. Technical measures, sanitary and psychosantry measures (SPS measures) are applied to protect human, animal, or plant life from risk arising from additive, pest, contaminants, toxins, or disease causing organisms, and to protect biodiversity. This includes ban or prohibition of imports of certain goods, all measures governing quality and hygiene requirements, production process, and associated compliance assessment. For example, prohibition of import of poultry from countries affected by avian flu, meat, and poultry processing standards to reduce pathogens, residue limits for pesticides in food, etc. Then we have technical barriers to trade (TBT). Technical barriers to trade (TBT), which covers both food and non-food traded products, refers to mandatory standard and technical regulations that define the specific characteristics that a product should have, such as its shape, size, design, labeling, marking, packaging, functionality, or performance and production methods, excluding measures covered by the SPS agreements. These specific procedures used to check whether a product is really conforming to these requirements. Conformity assessment procedures, that is testing, inspection, and certifications, are also covered in TBT. This involves compulsory quality, quantity, and price control of goods before shipment from the exporting country. Just as SPS, TBT measures are standard based measures that countries use to protect their consumers and preserve natural resources, but these can also be used effectively as obstacle to imports or discriminate against import and protect domestic products. Altering products and production process to comply with the diverse requirement in export market may be either impossible for the exporting countries or would obviously raise cost, hurting the competitiveness of the exporting countries. For example of TBTs are food laws, quality standards, industrial standards, organic certification, eco-labeling and marketing and label requirements. Then we have non-technical measures. These include different types of trade protective measures which are put into operation to neutralize the possible adverse effect of imports in the market of the importing countries. Following are the most commonly practiced measures in respect of imports. Import quotas. An import quotas is a direct restriction which specifies that only a certain physical amount of the good will be allowed in the country during a given period of time, say usually 1 year. Import quotas are typically set below the free trade level of imports and usually enforced by issuing license. There are some licenses for that. This is referred to as a binding quota. A non-binding quota is a quota that is set at or above the free trade level of imports, thus having little effect on trade. Import quotas are mainly of two types: absolute quota and tariff rate quotas. Absolute quotas are quotas of a permanent nature limit the quantity of import to a specific level during a specific period of time, and the imports can take place any time of the year. No condition is attached to the country of origin of the product. For example, 1000 tons of fish imports which can take place at any time during the year from any country. When country allocation is specific, a fixed volume or value of the product must originate in one or more countries. Example, a quota of 1000 tons of fish can be imported any time during a year, but 750 tons must originate from country A and 250 from country B. In addition, there are seasonal quotas and temporary quotas. With a quota, the government of course receives no revenue. The profit received by the holders of such import license are known as quota rents. While tariff directly interfere with prices that can be charged for imported goods in the domestic country market, import quotas interferes with the market price indirectly. Obviously, an import quota always rises the domestic price of the imported country. The license holder are able to buy, import and resell them at a higher price in the domestic market, and they will be able to earn a rent on their operations over and above the profit they would have made in the free market. उनको रेंट भी मिलता है, प्रॉफिट भी मिलता है. The welfare effect of quotas are similar to that of tariffs. If a quota is set below free trade level, the amount of imports will be reduced. A reduction in imports will lower the supply of goods in the domestic market and raise the domestic price. Consumers of the product in the imported countries will be worse off because the increase in the domestic price of both imported goods and the domestic substitutes reduces consumer surplus in the market. Producers in the importing countries are better off as a result of the quota. The increase in the price of their product increases producer surplus in the country. The price increase also induces an increase in output of existing firm. मतलब output बढ़ता है, and perhaps the addition of new firms, an increase in employment and hence increase in profit. कुछ नया firms भी add होता है, उसके कारण employment भी बढ़ता है और profit भी बढ़ता है. Then we have price control measures. Price control measures includes additional taxes and charges are steps taken to control or influence the price of imported goods जो import हो रहा है in order to support domestic price of certain products when the import price of these goods are lower. These are known as para-tariff measures and includes measures other than tariff measures that increase the cost of imports in a similar manner, that is by a fixed percent or a fixed amount. Example, a minimum import price established for sulfur पता है chemical. Then we have non-automatic licensing and prohibitions. These measures are normally aimed at limiting the quantity of goods that can be imported, regardless of whether they originate from different sources or from one particular supplier. These measures may take the form of non-automatic licensing or complete prohibitions. Pura. For example, textiles may be allowed only on a discretionary license by a importing country. India prohibits import or export of arms and related material to or for Iraq. Further, India also prohibits many items, mostly of animal origin, falling under 60 exim code. एक specific code से list है exim, उसको गूगल कर लेना. ठीक है. Then we have financial measures. The objective of financial measures is to increase import cost by regulating the access to and cost of foreign exchange for imports and to define the terms of the payment. It includes measures such as advance payment requirement and foreign exchange controls, denying the use of foreign exchange for certain types of import and for goods imported from certain countries. For example, an importer may be required to pay a certain percent of the value of goods imported 3 months before the arrival of goods, or foreign exchange may not be permitted from import of new spirit. Fifth, measures affecting competition. These measures are aimed at granting exclusive or special preference or privilege to one or a few limited groups of economic operators. It may include government imposed special import channels or enterprise and compulsory use of national service. For example, the statutory marketing board may be granted exclusive right to import wheat, or a canalizing agency like state trading corporation may be given monopoly right to distribute palm oil. When the state agency or a monopoly import agency sells in the domestic market at a price above the existing in the world, the effect will be similar to an import tariff. Then we have government procurement policies. Government procurement policies may interfere with trade if they involve mandate that the whole of the specific percentage of government purchase should be from domestic firms rather than foreign firms, despite higher price than similar foreign suppliers. In expecting public tenders, a government may give preference to the local tenders rather than foreign tenders. Then we have trade-related investment measures. These measures include rules on local content requirements that mandate a specific fraction of a final goods that should be produced domestically. Example, requirement to use certain minimum level of locally made components. Example, 25% of components of automobiles should be sourced locally. Restricting the level of imported components, कुछ restriction कर रहे हैं, कुछ requirement दे रहे हैं, and limiting the purchase or use of imported products to an amount related to the quantity or value of local products that it exports. Example, a firm may export only up to 75% of its export earning of the previous year. Maximum उतना limit रखा है. Then we have distribution restrictions. So distribution restrictions are limitation imposed on the distribution of goods in an importing country involving additional licenses or certification requirements. These may relate to geographical restrictions or restrictions as to the type of agents who may resell. For example, a restriction that imported fruits may be sold only through outlets having refrigeration facilities. Then we have a restriction on post-sale services. That is, producers may restrict from providing after-sale service for exported goods in the importing country. Such service may be reserved to local service companies of the importing countries. यानी फॉरेन कंपनी को ना कहते हुए जो लोकल है उनको एम्प्लॉयमेंट देंगे. Then we have administrative procedures. Another potential obstruction is to free trade is a costly and time-consuming admin procedures, that is administrative procedures, which are mandatory for imports of foreign goods. These will increase transaction cost and discourage imports. So the domestic import competing industries gain by such non-tariff measures. Example include specifying particular procedures and formalities requiring licenses, admin delays, red tape, and corruption in customs clearing, frustrating the potential importers, procedural obstacles linked to proven compliance. Then we have the rules of origin. So country of origin means it would be the country in which a good it was produced, or in the case of traded service, the home country of the service provider. Rules of origin are the criteria needed by government of importing countries to determine the national source of a product. Their importance is derived from the fact that duties and restrictions in several cases depend upon the source of imports. Import Important procedural obstacles occurs in the home countries for making available certifications regarding origin of goods, especially when different components of the product originate in different countries. Safeguard measures. These are initiated by countries to restrict imports of a product temporarily if its domestic country is injured or threatened with serious injury caused by a surge in imports. Restrictions must be for a limited period and non-discriminatory. Then we have embargoes. An embargo is the total ban imposed by government on import or export of some or all the commodities of a particular country or region for a specific or indefinite period. This may be done due to political reason or for another reason such as health, religious sentiments. This is the most extreme form of trade barriers, rukavat. Then we have export related measures. So first, ban on export. Export related measures refers to all measures applied by the government of the exporting countries including both technical and non-technical measures. For example, during period of shortages, export of agriculture products such as onion, wheat, etc. may be prohibited to make them available for domestic consumption. Export restrictions have an important effect on international markets. By reducing international supply, export restrictions have been effective in increasing international prices. Then we have export taxes. So an export tax is a tax collected on exported goods and may be either specific or ad valorem. The effect of export tax is to raise the price of the good and may decrease the exports. Since the export tax reduces the export and increases domestic supply, it also reduces domestic price and leads to higher domestic consumption. ज़्यादा टैक्स बढ़ाए तो फिर वो एक्सपोर्ट ही नहीं करेगा, वो डिस्करेज हो जाएगा जो भी सप्लायर है, एक्सपोर्टर है, फिर वो एक्सपोर्टर क्या करेगा, डोमेस्टिकली सेल करेगा, डोमेस्टिक के लिए फिर उसका प्राइस भी कम रहेगा, उसके कारण मार्केट में सप्लाई बढ़ जाएगा और कंजम्पशन भी बढ़ेगा. Then we have export subsidies and incentives. We have seen that tariffs on imports hurts exports, and therefore countries have developed compensatory measures of different types for exporters like export subsidies, duty drawbacks, duty-free access to imported intermediaries, etc. Government or government bodies also usually provide financial contribution to domestic producers in the form of grant, loans, equity infusion, etc., or in some form of income or price support. If such policy on the part of government are directed at encouraging domestic industries to sell specific products or services abroad, they can be considered as ट्रेड पॉलिसी टूल्स. यानी गवर्नमेंट इंसेंटिव देता है कि आप, वो बोलता है ऐसे आपका डोमेस्टिकली कोई प्रोड्यूस गुड्स है जो आपके पास एडोकेट क्वांटिटी में है या फिर पूरे कंट्री में अच्छा खासा वो अवेलेबल है, तो गवर्नमेंट इनकरेज करता है कि उस पर आप एक्सपोर्ट करो, आपको कुछ टैक्सेशन में इंसेंटिव मिलेगा, कुछ ग्रांट्स मिलेंगे, लोन मिलेंगे. इसके कारण एक्सपोर्ट भी होता है, गवर्नमेंट का फ़ायदा होता है क्योंकि फॉरेन करेंसी आता है, और ट्रेडर या एक्सपोर्टर का भी फ़ायदा होता है. Then we have voluntarily export restraints. Voluntary export restraints (VERs) refers to a type of informal quota administered by an exporting country voluntarily, restraining the quantity of goods that can be exported out of that country during a specific period of time. Such restraints originate primarily from political consideration and are imposed based on the negotiations of the importer with the exporter. The inducement of the exporter to agree a VER is mostly to appease the importing country and to avoid the possible retaliation trade restraints that may be imposed by the importer. VERs may arise when the import competing industries seek protection from a surge of import of particular exporting countries. VERs causes as do tariffs, quotas, domestic prices to rise and cause loss of domestic consumer surplus. Over the past few decades, significant transformations are happening in terms of growth and as well as trends of flow and patterns of global trade. The increasing importance of developing countries have been a silent feature of the shifting global trade patterns. Fundamental changes are taking place in the way countries associate themselves for international trade and investments. Trading through regional arrangements which foster closer trade and economic relations is shaping the global trade landscape in an unprecedented way. Alongside the trading countries also have devised indigenous policies aimed at protecting their economic interest. The discussion in this unit are in no way comprehensive considering the faster pace of discovery of such protective strategies. Students are expected to get themselves updated on such ongoing events. The सबसे रिसेंट इवेंट है यूएस चाइना का वॉर. अगर आप न्यूज़ फॉलो कर रहे हो पॉलिटिकली तो ज़रूर गूगल पे सर्च करना अभी क्या चल रहा है. किसी यूएस ने कुछ टैरिफ लगाया है उसको उसके अगेंस्ट चाइना ने भी कुछ एक्सपोर्टिंग या इंपोर्टिंग के ऊपर कुछ टैरिफ लगाया है और इसके कारण अदर जो भी कंट्रीज है इकोनॉमी है उस पर क्या इम्पैक्ट आ रहा है ज़रूर आपने पढ़ना है या फिर यूट्यूब पे जो भी आपको न्यूज़ वीडियो है वो कंज्यूम करना है. सो टिल देन कीप लर्निंग कीप वॉचिंग एंड कीप रॉकिंग. बाय बाय.